How to use debit spreads on weekly options and more to grow a small account. Okay, let's talk about debit spreads. There's two types of debit spreads. There's the call debit spread and there's the put debit spread. Okay, the call debit spread is a bullish strategy. You're buying a call at one price and then you selling a call at a higher strike price. The put debit spread is a bearish strategy. You're selling a put at one price and you're buying a put at a higher strike price. So on the call debit spread, you expect the stock to rise. On a put debit spread, you expect the stock to fall. Now let's look at some real life examples of this right now. Okay, this right here is Apple. Let me pull the screen down so you can see it perfectly. This is Apple, and I like to trade debit spreads on stocks that have a lot of volume. So Apple is one that I would do a call credit spread because it continues to rise. I don't know if it's going to have a down day like this or drop, but it's more predictable on the rise because if you look at the 1 year chart, it goes up, pulls back, comes back. It's been doing this for 3, 4, 5 years if you know the history of Apple stock. So, and how will we do a debit spread on this? Let's say we expect it to go to 155. So I can just go over to my Robinhood and just give you an example. If I expect this is a put, so let me go exit out of this and just do a call. So I expect the stock to increase to 155, and I expect it to do this by, I'll say, December the 3rd. So what I would do is the current price right now is 150. So I will buy me a call at 150 and I will sell one at 155. And what this debit spread will do is just lessens my risk. If I bought a call out, I'm risking this amount. If I bought a call, let's see, I would risk 338 if I bought the call outright, but I'm lessening my risk to 190. Let me pull it up so you can see it. I'm lessening my risk here to $190 instead of the 338 just buying the call outright and by selling this. So I expect I'm looking at the wrong one. I'm talking doing all this talking. No, let's go back over here. I'm buying here and selling here. Okay. There we go. I'm risking 190 and instead of risking 338. So it just lessens my risk and my max amount profit that I can make is going to be 310. So, and that's if the stocks gets to 155. I'll break even if it goes to 151. So I'll just get my 190 back minus commission if it goes to that amount. So the good thing about debit spreads, it allows you to trade. If you want to do this on weekly, let's say if you just wanted to do a weekly debit spread, you can go here, buy at the 155. If you expect it to go up $2 this week by the end of the week, let's keep going to the put side. Okay, buy here and then sell here. Hold on, buy here, buy at 150, sell at 155. But it has to go up to 155 by the end of the week to realize the maximum profit. So if you do that, your max loss is 107. Your max profit will be 393. And this is on weekly. You can do this on weekly options. You can do this with ETFs, any type of stock. You can pretty much any stock that you expect a bullish type move, you can do this with any stock. This is just Apple right now. I'm just giving you an example. So, and on the it's the same with the debit put spreads. The debit put spreads. This is an example of AT&T. You know, it's been dropping lately. So if AT&T drops to 24, this put debit spread, let me go down and show you. Let me pull it down so you can see it. This put debit spread right here is will make you about $100 if it drops to 24. So it's at 25 right now. So, and with the same thing, you're going to sell a call. See it right here. You selling a call at one price and you buying a call at a higher strike price. And this is a bearish trade. So this is a bearish trade if you expect the stock to drop to 24. And sometimes I do use the screeners with bar chart, but I really don't rely on screeners. I just look at the interactive charts. I rely on charts to make a decision if I'm going to do a debit spread. If I see some trending going on, if I look at unusual option activities and I see a lot of calls being bought at a certain price, and I will do here's a screener though, I will do a debit spread. And I like call debit spreads better than I like put debit spreads because they're easier. You know, when the market is going up, things are easier. But if I want to go to do one on a AT&T stock, sometimes I may do it on a stock like AT&T, like I showed you here. So let me pull it back up so you can see it. Yeah, on an AT&T stock like this. So there's always money to be made on in the market where the stocks are going up, going down, or moving sideways. And I did during COVID. I bought a lot of puts. When I saw the market trending down during COVID, I did a lot of put spreads. So put debit spreads, and I was buying puts and it was making a little bit of profit, and it started coming back up. So I had to stop that strategy. And then I moved back over to calls and call debit spreads. But that is it. If you have any questions, feel free. This is the call. This is just showing the profit potential on debit spreads for Apple. Yeah, if you have any questions, just leave a comment and I'll be glad to help you. All right. Have a great day.